Hey everyone, welcome back. My name is Zane and today we'll be having a look at GGPI stock. That will be the Polestar SPAC. GGPI has been down 25% in 2022 so far. In the last day, the stock has fallen big time. I believe the stock has fallen at least 10% within the last 24 hours. It actually went as low as $8.60. That's quite incredible. But why is this happening? So this is what we'll try to understand today. We've got a brilliant article from Investors Place. We're going to try to make sense of this. Now, obviously, we know that the SPAC merger will be taking place on the 22nd of June this month. If all shareholders are in accord, then the SPAC merger will be completed. The ticker symbol will change from GGPI to PSNY. But why is the Polestar stock falling? After so many good information has been released about Polestar recently, why is this happening now? Something to understand is obviously that the entire market is performing badly right now. It's not just Polestar. If we take a look at Netflix was up to $183 recently, and that's about a couple days ago. Now it's $173. Still, it's still doing better than where it was, say, 3 days ago, $164. Incredibly cheap. Let's consider another stock, Tesla shares. A couple of days ago, it was as high as $706. Now it's $635, and it was as low as $627. So the first thing I'd like to identify is that it's not just the GGPI stock that's performing badly right now. It's not just Polestar. The entire market is having a bad experience. The entire market seems to be falling roughly around 5 to 10%, not just Polestar. That's the first thing I'd like to identify. So yes, now that we understand that the stock is slipping ahead of the special acquisition company SPAC merger that's being voted next week, exciting times because I'm super excited. Today's the 17th. We're not too long away from seeing the Polestar fully merge. Now the new US Securities and Exchange Commission regulations seem to be scaring investors. So that's quite interesting. We'll have a look at that if we can. Now, it's also said that GGPI stock is also down on electric vehicle sales, but in all fairness, I'm not really worried about that because that happens. That happens to almost every EV company, and sometimes it's not because of a demand. It's definitely not because of demand because Polestar has too much demand. They had over 32,000 orders as of 2022. This is before half of the year is completed, which means that if that's anything to expect for the rest of the year, could be around 20 to another 30,000 orders for the rest of the year. That will put us comfortably above 60,000 orders before the entire year is completed. But let's remember, Polestar can only deliver up to 50,000 vehicles this year. They've already told us that that's their realistic projections. They can't deliver anymore, not because of lack of demand, but because of difficulties in supply chain and manufacturing. And obviously, Polestar is heavily focused on manufacturing their new EV in the America, and that will be the Polestar 3, the SUV that's recently been released. We've seen a few images, at least 2 images. It hasn't fully been debuted yet until October, but it will be debuted in October officially. So yes, GGPI is busy on multiple things. They're also developing the Polestar 5 within the United Kingdom. Now the SPAC merger vote is set to take place on the 22nd of June, which is next week. The company is reminding investors to vote on the deal that would combine GGPI with Swedish EV company Polestar. So unfortunately, for GGPI stockholders, the last several months have been rough. With shares being down around 25% since the start of the year, it doesn't look like things are getting any better. But things are getting great for me. I like it when the GGPI stock goes down. I like it when it becomes cheap because that just means that I spend less money and I get more value for my money. So I'm actually quite happy that Polestar SPAC is undervalued, extremely undervalued. Now, as for the SEC, they're currently cracking down on SPAC mergers that include introducing new regulations that would require similar disclosure to the initial public offering, which would make sense. SPAC mergers have become extremely popular recently, and it's nothing new. SPAC mergers have been around for a really long time. It's just that recently they've become extremely popular because it's such an easy way to be added to the stock market simply by merging with a company that's a special acquisition company. Now it looks like the SEC is looking at these rulings, they're looking at these laws and regulations, and they're looking to reform things when it comes to a SPAC merger. And that could affect future SPAC mergers, and we could of course see less SPAC mergers. That's if it becomes more difficult for SPAC mergers to be completed. Let's not forget the point of SPAC mergers is for the simplicity of a private company becoming a public company simply by merging with another. But if it becomes more difficult for this process to be completed, well, that kind of defeats the purpose of a SPAC. Now, new sell estimate for EV from Jefferies have come to light. Analysis from the firm dropped EV sales to an estimate 8.7 million in 2022 and 11.5 in 2023. The prior estimate were for 9 million and 11.8 million respectively. So that's quite interesting. Now, there's not a big difference with 2022 projections and with the current estimate. There's not a big difference at all. But I don't think this huge dip in Polestar SPAC merger stock price, I don't think it's a big deal. The reason this is because Polestar currently has over 55,000 vehicles on the road, 32,000 pre-orders this year alone, and that's in the first 5 months. Polestar currently operates in 25 different global markets around the globe, and they will be operating in 30 different global markets by 2023. That's next year. Polestar is projected to deliver between 50,000 to 60,000 vehicles this year, but at a proper estimate around 50,000 vehicles. And so far in 2022, we've seen a 290% increase in Polestar vehicle sales. Now, I still have strong belief in Polestar. It's just a matter of time. Everything works differently. I think a lot of people were expecting Polestar to just be around $20 by now, maybe $50 by now, but I thought that was quite ridiculous. I mean, everyone who was saying these things, they weren't considering the full market. The full market we're in right now is quite toxic. It's a toxic market. If you look at the market full, the entire market is doing bad. And the entire market is doing so bad that Tesla has actually announced a stock split, which has had me extremely excited because I'm going to get more stocks from Tesla for free. Obviously, it's the same value, but technically more stocks. So I'm excited for that. So thank you to Tesla. But if you don't believe me that the market is doing bad at the moment, just look at Apple. From the 15th, Apple was $137, and recently their price was as low as $129. Even Apple had a huge hit in the market. It's not just Polestar. So stop panicking. Please, stop the panic. Let's just relax for a moment and consider everything. Anyway, this was my video on Polestar dip in the market. Thanks for watching. Subscribe to see more, and I'll see you in my next video.